Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analyst from TradetheChain. My name is Nick Mancini, joined by CJ and Monte, all senior research analysts at TradetheChain, and we are here to break down everything going on in crypto, TradFi, macro, and all the buzzwords you can name in the financial sector. Now, today was a bit of a weird trading day with Jerome Powell both speaking and being ushered off stage by due to some climate activists. So if you caught that live, that was definitely one of the more interesting pressers he's had. But crypto or Bitcoin,
climate activists?
Yeah, did you not see that?
He was not pushed off by the activists, but
what do they have to complain about? How is that his fault?
It's too warm.
Definitely not his fault. It's clearly it's all the CO2 emissions fault, as the climate activists would say. But we're definitely not here to have a climate discussion. I don't think anyone wants to hear that. But definitely the funny of the day is Jerome Powell getting rushed off stage due to some protesters. So let's go ahead and dive into it, because Bitcoin is up along with some other assets, but we definitely have some overperformers and underperformers too. So Bitcoin total market cap sitting at 1.09 trillion, mostly unchanged since the Monday pump. Interestingly enough, average daily sentiment across all cryptos is bearish, and I would say that's most likely due to alts vastly underperforming Bitcoin throughout the past week. Trading volume above 40 billion, definitely what we want to see. Tweet volume is up, so retail is definitely getting excited about the price action we are getting. Like I said, Bitcoin up on the day, Ethereum not faring so well, and sentiment has evened out a little bit. Remember, Bitcoin was mostly bullish throughout the week, now sitting around neutral level along with ETH. Obviously some hot on Twitter, but a lot of gains erased this morning after Jerome Powell spoke. Some cryptos are recovering. We'll definitely cover that later on. And then what I thought was interesting is we're seeing more exchange inflows. We definitely had a large withdrawal, but there's vastly more green in terms of total than red. So we are seeing more coins being added to exchanges, which is definitely what we want to see if you are a bull. So that's good news. So let's kick it over to DXY, which we typically start out with. And I think Monte did a great overview yesterday in terms of what's going to happen. And we got cut down at the previous daily close early this morning. And now we are hovering around the lows of where we were hanging out yesterday. So Monte and I's kind of bull bear lines were, up towards 107 and down towards 105.5. And we are obviously moving lower towards that. So if we kind of zoom out a little bit, lower high is looking a little bit more likely for DXY, and the bulls across all markets will definitely be happy to see that. But to confirm that lower high again, we do need to sit there. So I don't think we need to spend too much time on this, because we did go over it during the AMA yesterday. But obviously for our non-members who are listening and did not get the full breakdown yesterday, Monte, CJ, anything else that we want to talk about in relation to DXY before we kick it to some other assets?
I have nothing to say in terms of the DXY. I would like to talk about just one last rant about bonds, and then also share a mistake that I made, or just something that should not be repeated. Because I have a suspicion maybe some of you in the audience may have done the same thing or have done the same thing in the past. But,
do you have a chart for bonds? Because I think that's also a good kind of inverse proxy for the market, other than DXY, that we don't cover too much. So I think we talked about that on Monday, maybe, or it was yesterday. But is there a chart you'd like me to pull up or that you have?
Yeah, I got it. Okay. I don't know how to put this politely, but bonds are fucked. Like, I'm sorry.
Yeah, good try. You almost got it.
Yeah, but so I talked about this last night, and I'll tell you about the mistake and what I should have done and what I actually did. So last night, or as of today, I was sitting on these open positions, the ones we've been talking about: long gold, long Dow, long Swiss. Those are primarily all risk-off trades going into today, right? Last month was very difficult. Not a lot of volatility. this particular week had opportunities to make quite a bit of money. So I'm sure some of you guys, your P&Ls hit levels that they hadn't hit previously. For me, that was the case. And I think naturally when you feel like that, your first instinct is to take profits very quickly or too early. And what I should have done is put the bond hedge on or a short on this particular asset, because like this has been the perfect risk off hedge, because when you have things like Dow go up and NASDAQ go up, bonds just didn't do anything today. Like they barely went up a couple basis points. But when all that stuff falls, bonds get hit hard, or bonds get hit the hardest. And why is that? Because everybody's buying record inflows into things like EDV and TLT, which is why, they're making new lows again. So to me, this is like the perfect hedge to risk on in Swiss franc, risk on in Dow. And, fortunately, these have been kind of acting as like safe havens. But overall, it would have been so much easier to just put that hedge on as opposed to taking profit or cutting some of the other positions and saying, oh, well, if strength comes back in, then I'll get back in on the 15 minutes. Like that is trying to just guess in terms of pure randomness. And although this particular mistake that I made of taking profit in some of those positions, you can't afford to miss that potential upside and cut winners, because 2 to 5 of those winning trades every single year are going to make 80% of your P&L. So and I fucked that up. All right, I'll reel it in a little bit now, but it might not seem like a big deal because I didn't make money, but if I repeat that action of exiting too early, it's going to ruin my P&L in the long term and lead to things that you don't want to happen. So you have to be very disciplined about this. And if I were to do it again, it's just, if these positions are working, like the 200-day moving average is irrelevant. The 20 SMA is irrelevant. These are just levels. Once the positioning goes to neutral, that's when the edge is done. And that's when it's the proper time to kind of exit. And I think if you're doing it, or if I'm doing it any other time before that, it's probably going to lead to less effective returns in the long run. So that's the end of my rant.
All very good points. Very much appreciate that. And obviously owning up your mistakes and being honest with them. I'm sure our viewers very much appreciate that, because a lot in this industry only like to talk about the wins. So,
I mean, Monte or Nick, like, is that relatable? Do you get, like, have you felt that way? Because I know you're in these trades too.
I'll be honest, my biggest issue is typically exiting. I'm usually great on entries, and I've talked about this with the TTC community, is that, a lot of times I'll watch 20-30% slip away because I don't close. So unfortunately, I think my problem is the inverse of you. Instead of closing too early, I tend to close too late. So I try to take money off the table, especially when things are chopping around so much, more often than not. But I totally understand the issue of, when there is a winner, especially sector winner or an inverse kind of asset to where momentum is headed. I do agree that probably better to be patient with that exit rather than, impatient, if you will. But Monte, I'd love to hear your thoughts as well.
Yeah. No, I mean, listen, hindsight's always 20/20, and it's in retrospect, of course, yeah, having being short bond futures would be a great hedge to this equity market price action. But, like CJ pointed out, there's been record inflows into things like TLT and EDV. And it's like, there's a reason for that, right? People are scared. So I don't know that, like, I'm not, like, CJ, are you upset that you missed the opportunity to?
I'm upset because I deviated from my process of not exiting when the COT returned to neutral, but exiting because I just wanted to take profit and bag, whatever, just it's about sticking to the process, being very disciplined over time. That is the only way you even have a glimpse of a chance of this game.
Agreed. Especially when we're talking about these, incredibly volatile and fast moving safe haven assets. The one thing that I wanted to just briefly bring up and talk about as a trade, something we've talked about in the Discord. CJ, you mentioned this one last week. But this week, even though it's at 52-week highs, I still think it looks like it's going to continue to run. And that is the Swiss franc Japanese yen pair. CJ laughs. But, this thing is just like proving itself as.
Did you trade this?
No, I actually, unfortunately,
just Swiss?
Just in the Swiss franc.
How terrible.
See, that's what I was going to say is like, okay. So
I got lucky in this particular instance. There's other instances where most instances I wouldn't be lucky. That's how it is in the majority of my life, I would say. Anyways, let's move forward.
Yeah, no, I get you. But like, I don't think you can beat yourself up over every missed trade. But if you deviate from your process and miss a trade, that is one of the most frustrating things that can happen, because it's like, there's being right and there's making money off being right. And if you're right and you don't make any money, that's almost like as bad as a loss in my books. Or like, if I miss a part, it's not like I'm saying that you need to catch every move to the upside in every market, but when you
let it run till the process says that's enough.
Yeah. And like, maybe I've been a bit annoying about this in the Discord, but I don't know what more I can do to get the point home. I've literally been, so the first trade was on October 5th, but since then, I've been talking, like on the 13th, I said a break above the 200-day moving average is a good trigger for entry if you miss this trade. Yesterday I said still looking good. Still think this thing is going to continue to ride to the upside. Now this has become a more mainstream kind of flight to risk trade, but I still think that until proven otherwise, the Swiss franc and gold are the best places to be right now. So I haven't, I took 1/3 off at, the 200-day moving average, moved my stops to break even, and I'm just keeping it very simple. I think that this has proven itself to be the fastest horse. I just brought up the Swiss franc Japanese yen pair as an alternative for people that may have missed the US dollar trade. I think that Swiss franc Japanese yen trade might have a little more juice left in it just because the yen is so weak, and I don't think that it's going to change anytime soon.
Well, they're going to do something of that. Like, remember the 2015 whole Swiss bank something like that? I feel it has to happen to yen at some point.
Well, I think the Japanese government just announced random bond buying. I think it was this week.
Yeah, they're going to need to do more than that.
Oh no, I agree with you, but I think that's definitely helping that trade that you mentioned in relation to their, quote unquote emergency actions, which there seems to be an emergency every month with the yen at this point. So let's talk about something that is not an inverse trade, which is, quote unquote the market. And I remember, we were very excited about this, reclaim of the 1-day estimated 200 moving average. But now that we're kind of building a little bit more market structure here, does look like we're just putting in lower highs. And that is very worrisome when you've also got a series of lower lows. And so, it did kind of play out very technical here, because we mentioned that this July low was going to play, going to be kind of the critical level that you needed to break above to then start moving higher. Clearly, nice little double top rejection here. And now we're hovering just above the 1-day estimated 200 moving average again. So for all of my, Twitter memers, if you know the complex pullback meme, this is pretty much where you would expect that complex pullback to pull the springboard. So, I'm going to zoom in a little bit here on the 4-hour just to give you a better perspective of what I would look for in terms of a bounce. Now, if we zoom in a little bit, you can see giant Darth Maul candle during Jerome Powell's speech that just closed recently. So we basically ran the high of that range and ran the low of that range relatively quickly. If we do break below, you will, end up probably around this 42.56, 42.55 area. And then that is when things get really hairy. So I would say if you don't really form a springboard here, your last chance is going to be at these lows. And then if we end up breaking below the lows, then we will end up below the high from back in February. And that's when things get really sticky. Now, what would probably cause this to happen? Would definitely be, I think, another rate hike in November. We would likely end up at these lows or possibly lower, or a U.S., kind of escalation with Israel and Hamas. That means possible boots on the ground. That means our warships are engaged. It's more than just the quote unquote lend lease actions of providing, relative supports and weaponry, but not actually shooting any weapons ourselves. And this could also come from a U.S. drone getting shot down or something, small that ends up building in time. So I'm not exactly saying we are going to head down yet, but you have to be prepared for that option. And you also have to know, where do I want to buy? And I'd say if you're buying here, you're taking pretty good risk, because your risk would definitely be a stop at this low down here, and you're kind of hoping for something like that, or maybe just a bounce here and then move higher. So I wouldn't be too bullish right now, because who knows what FOMC is going to bring, and who knows what the Middle East is going to bring either. But I'm seeing a lower high right now, and we definitely do not want to form a lower low down here, because that's when things get really sticky. So that I kind of want to talk a little bit about gold next, because I do like what Monte mentioned with, those are the safe haven assets, and we're looking for, where do we want to see safety? What do we want to react to, a bearish asset or potentially bearish asset like this? But do you guys have any strong opinions on S&P 500 right now? I think Tesla also got clobbered on their after their earnings call yesterday, which is probably negatively impacting the S&P more than the rest of the buckets. But, here we are.
Yeah. And I think that's an important thing to note, because there are a lot of earnings reports coming up this week and next week, and a lot of major, NASDAQ stocks, things like Google, things like Meta, Microsoft, I believe, also has earnings coming up. So seeing the way Tesla reacted to earnings, I think kind of set the precedent for how a lot of these other assets are going to react to earnings. Like I said, I don't necessarily care to bet on the outcome of the earnings, just the way market participants react to them. And, with Tesla, looking the way it is, being down almost 10% today, after it did miss on both the top and the bottom, but still down 10%. I think that sets a precedent for any stock that has earnings coming up. Like, be wary into earnings, be ready for some regression to the mean, because a lot of these assets still are sitting near their 52-week highs, things like Google, things like Microsoft. And, I am still somewhat bullish Google until earnings, but post earnings, I think you could see something like this with Tesla, where you get a massive drop, even if it beats to the upside. I don't think it really matters in the grand scheme of things. I think more so what matters is how people react. And clearly, this was negative earnings, hence a negative reaction. But I think even if there were a positive result to earnings, I don't think that would have been a catalyst enough to drive this into a 52-week high or anything like that. So I think this earnings report in general for all these major assets is going to end up having a negative impact on price, even if they do beat. And although Tesla didn't beat on the top or bottom, I still think it's kind of acting as a precursor for what we may see in some of the other equities later this week and into next week as well.
Yeah, I do agree with you. And this is what I would look at if you are trading Tesla, since it is a very popular stock. If this kind of 206 to 215 level fails, it's probably going to end up trading down to the lower end of the previous range towards 150, 160. So, we've got the low from August right here, and then we've got these highs from back in February. We also have this high from, end of April, early March. So this is what I would look for in terms of a little demand zone. Pop out of here. First target would be right here, and then break above the 1-day estimated 200 moving average, you look for the gap fill. And then I think if you get the gap fill, then, there's a whole nother trade to analyze there. So if you are a bull, look for, low 200s, it's definitely approaching what I would call the landing zone. If things get hairier, then I'd look for, mid 150s in my opinion. So. All righty, let's move over to the crypto side, which has been pretty much unusually the better performing side of the market. That has not been the case for much of this year. I don't want to get too ahead of myself, but we did see a lot of OI, open interest, come back. We're almost near the levels of when the Cointelegraph fake news pump happened. We are still unable to firmly get above the second high that we made after the grayscale news, which I would definitely say is a bit worrying. But we are, do seem to be holding strong, around these levels. So early indication does seem that we want to, or it wants to kind of usurp this level and then move up to kind of the 30K area. But if we do close back beneath, this level and the 28.6 level, just to zoom out, I always just want to make sure everybody knows what I'm doing here. But that's the low from August, and then the line below it is the grayscale pump high. So I'm kind of using that as a proxy range with respecting these highs up here. So if we can flip, I think the ideal level is you definitely want to flip kind of 27.8. If you can do that, then you should be able to move up to 30K. But if you break back below 28.6, you are very likely to kind of do exactly what we did yesterday, which was got that break there, ended up tagging that low, which is the grayscale high. And then we just zoomed back up in the morning. So tough to really form a legitimate opinion about Bitcoin, but I do think that this is also a little special here. We've got a couple of closes above the 1-day estimated 200 moving average, and we have a close above the 3-day estimated 200 moving average. So if you are a bull, you've got, a couple of feathers in your cap. But I definitely think you need to see more before claiming that, we're headed all the way up to 32K. So what are you guys thinking about Big Daddy Bitcoin right now?
For me, it's pretty simple. I think, the simpler you keep it, the better it is. That's what I said this morning, and I still think that rings true. Like you said, we have a clearly defined target being the level at which we pumped up to following that tweet from Cointelegraph.
Literally 30K on the dot too, which is just hilarious how this market works.
It's a nice round number. And you're seeing stablecoin inflows as well. But what's more important to me is just look at the resilience that Bitcoin's showing and the outperformance. It's outperforming the alts. It's outperforming the equity market. Now, sure, it could be benefiting from the safe haven asset pump that we're seeing across the board and things like gold and Swiss franc. That would be nice because, a lot like Bitcoin in my mind should be a safe haven asset and, maybe should be pumping a bit more on this turmoil. But we've seen in past events like the invasion of Ukraine that Bitcoin doesn't always pump on the news of, global turmoil. So regardless, take all that out of take all that out of the picture. And what do you have? You have an asset that looks resilient and is showing signs of resiliency during an otherwise weak market. And that in itself is enough for me to justify a purchase that at least I plan to hold up at 30K. And that's what I mentioned this morning. The risk reward on that. And, whenever you have good defined risk, and I think you do have that in the 200-day moving average, anything below that, just cut it because then all bets are off. But to the upside, I think you use just a little bit of leverage and, you could very well benefit from a nice move up to 30K and potentially a move even higher than that if we see some continuation. So I'm keeping it very simple with Bitcoin. I said I opened up a small levered position after this morning's show with CJ. So I do have a 1.8x levered position in Bitcoin. It looks like this. Like
Did
I
you
said,
get did you buy futures, or is this still Bing X?
no, this is still Bing X. I did not do this through TradeStation. I still have some funds on Bing X, so just did it through there. But a futures trade, I think I don't know. I think that would work out well.
I just did. I mean, I did them through the CME. I was just it doesn't matter. I was just
anyway, you get exposure. I think it all anyway is good. But I do believe that we come back up and tag this level. You can see here with a risk reward ratio of 2.33. Add some leverage to that, you're looking at about 4. And I think that we see some nice return on that investment. So that's what I'm seeing for Bitcoin. I'm keeping it very simple. We're above the 200-day moving average. It's showing signs of resiliency. And that's all. That's basically all I need to see, right? Is that a little bit of resiliency goes a long way. And because I'm used to seeing on days like today when the stock market's down, we're used to seeing Bitcoin being down even more. So seeing it up 1% is a really good sign that I don't see a whole lot of people talking about in terms of like positive, potential for Bitcoin.
Now, Monte, oh, go ahead, CJ.
Can I ask you, like, what would you get? When did you get out, or what would get you out of that trade?
Yeah, what would get me out of that trade would be if we saw
on the upside. I mean, like,
yeah. So obviously, you got a dip below the 200-day moving average, and I cut it, but it's the upside. And this is something that I talked about a little bit earlier in Money in Motion as well. As so my target for the trade is 29.85, so not exactly 30K. I want to get out before that. But one thing that's going to
want to get out before it hit 30K.
Yeah, just before 30K, like $100 below 30K. But that being said, if we start to see signs of momentum waning, and we start to see signs that the market is potentially reversing, and Bitcoin starts to turn, gold starts to turn, the Swiss franc starts to turn, I think those would be good indications that there's really no good reason why Bitcoin would continue to pump. So if we see those safe haven assets that we talked about at the beginning of the show, being gold and Swiss franc, start to really turn, that might be one thing that would shake me out of this trade. But until proven otherwise, I think Bitcoin still has potential to benefit from this safe haven narrative. And ultimately, either a tag of like, my stop loss, or a kind of waning of the momentum in those assets like the Swiss franc and gold, I think would be a good kind of canary in the coal mine to perhaps exit this trade.
I think it's kind of ironic because the way in which gold and Swiss franc will unwind the fastest is if there is de-escalation within global, which would probably make stocks rip to the upside, ironically enough.
Yeah.
So
and that's the thing, is like there's definitely going to be, you definitely need to be ready for that remote event risk as well. But I don't know. I don't want to get into like the geopolitical speculation, but a lot of people are thinking that this could last for quite some time, which has the market scared. There's no doubt about it.
Think about the start of Ukraine, though. Like, now it's just like
a
consistent, steady grind that, like, I mean, obviously it's terrible, but nobody really cares. Like on a day-to-day basis, I mean, you know what I mean? The way it affects markets, the markets have reflected that people don't care. That's what
the markets don't care.
Well, the markets are just people. They're collective crowds. So that's really just what I meant.
So we did show that gold and Bitcoin, although not one-to-one correlated, have been more or less on a higher time frame correlated. This year, as of recent, much more. But we do also know the age old adage of, crypto typically follows equities, even if there is a lag in between. And we did talk about this chart, and obviously the daily candle continues to get uglier the more that we chat. So and I'm not in any trade right now on crypto. I'm completely flat across the board after this morning. But I did want to pose the question to Monte, which I think, our viewers could possibly extrapolate if they are long as well. Is there anything in the world of equities that would make you ditch a Bitcoin trade just by seeing some sort of risk off perspective and what is technically the world's largest market? Like, if we break below the 1-day estimated 200 moving average, do we think that would then carry over into Bitcoin, as that's kind of a critical eyeball test level? Or are we just thinking that there's going to be a decoupling due to the Middle East strife, and we're just going to basically ride with gold until there's a little bit more information on that side of the world? Now, I know this is kind of a difficult question. There's a lot of nuance thrown in between there, but the crux of my question is, if equities keep going down, is there a point where we start to flip our bias on crypto, at least in the short term?
The ironic thing about that is that the more equities go down while Bitcoin doesn't, or Bitcoin goes up, the more bullish I get, right? Bitcoin continues to show signs of resiliency, and that has me bullish on it. So there's not necessarily a point at which the equity markets will hit where I'd say, oh man, Bitcoin's in trouble, because Bitcoin has shown that despite, pretty overwhelming equity market weakness, it can have a positive day like today. So, will that be something that is repeated and is consistent? We'll see. Like, if tomorrow equities are down and Bitcoin's down, then that's a bit of a cause for concern. But if equities are down and Bitcoin's up, and we're heading into the weekend with that sort of decoupling and that sort of narrative in mind, I think we could really see, Bitcoin run. So ironically enough, Nick, the more equities sell off, and Bitcoin holds its ground, the more bullish I get, actually.
It's a good answer. I definitely, I don't know if I fully agree with that yet, because, and it's one of those things where I'll drive myself mad posing the question over and over again, because I think Monty's is making a better simplistic answer. But in the back of my mind, I'm always like, lag. I don't know if it's 3 days. I don't know if it's 7 days. I don't know if it's 10 days, but that's what I always think. And that's because history has kind of conditioned me to do that. And sometimes you have to remove that Pavlov's dog, bell ring type style conditioning, and reset your biases based on, the introduction of information. So I think that was a good answer, Monty.
Remember when Bitcoin pumped during the Silicon Valley Bank turmoil and equities sold off? Like, the market, in my opinion, is already telling you that like this thing is real. In my opinion, like the gold move, the market is telling you that it's somewhat real, and we do have a decent shot of going to all-time highs. If it weren't, then I think it would have fizzled out a lot more by this point already. Bitcoin's going up for the same thing. It's still up on the day over 1%, despite the fact Dow has dropped like 50 basis points in the last hour. So, Bitcoin's trying to show us its colors here. I hate to personify it like that, but
like it's a peacock.
The market's trying to tell you something. Like, I think it's very clear right now, especially over the fact that it's occurred like multiple days. The title of this show is that we didn't go down, so we're probably going to go up. That's literally the whole point. That's all Monty and I are saying, I think.
Yeah, you could have summed up my...
Just to confirm, so Silicon Valley Bank collapsed on the 10th. The market, crypto front ran that, as did equities. So where was it? Fuck. Where's the March 2022? Or was it 23? Or yeah, so it was March 23, and I don't know why I lost my March 23 here. So March 23 was right here. So both crypto and equities did tank. And then as soon as it did collapse is when the bottom was formed, which also goes back to what we talked about on the AMA yesterday, which is, as soon as the event happens is when everybody starts to clamor back in. So, but it's not that I'm trying to be disrespectful or anything, but I just want our viewers to know that crypto and equities did drop into the collapse, and then both recovered after the collapse. So just want to make that point.
But that was the narrative at the time, was that Bitcoin was going up because banks were falling. There were no other reasons for it to go parabolic necessarily.
Yeah.
Like it didn't just go up; it went straight up, literally.
Yeah.
So
yeah, that move was insane. Well, this was about a 40% move, I think. 45, yeah, 50% on the dot from peak to trough on that first boost. So that was a fun quarter. Please bring it back if any market makers are listening. Let's move over to ETH, and let's start with ETH BTC, because Monte and I actually had a really good discussion on this, and we definitely think there is a play to be made. But if it does break below the recent low that it made on Monday, things are going to get a lot more hairy. And Monte and I were talking, and I'd love to hear Monte's thoughts on this as well, but talking about it basically event risk, because we just saw, and this was when the ETF announcement happened, is ETH BTC dropped, what was this, almost 6%, just on a fake news candle. And so clearly, I do think that there's a possible good play for ETH BTC, provided we can still close and hold above Monday's low. But if you are longing into this, and remember, we have that mandate coming on Sunday, or it's supposed to come Sunday from the courts about the GBTC to ETF transfer. I don't know how big of news that's going to be, but there is, obviously something on the horizon. So if you are long ETH BTC into a BTC ETF approval, market's already shown you what's going to happen. So, do you really want to carry that kind of risk over the next 90 days, or would you rather, kind of ignore the trade? And I think that's tough to say, because there is a chance in the next 90 days for ETH to make a play, but you always have to remember, if you go to sleep at night, you could wake up to a minus 10% candle if you're trading ETH BTC, so it's a tough question. But Monte, before we kind of move into ETH as a specific asset, do you more or less agree with that, or do you have any additional thoughts?
The one problem I have with ETH BTC right now is the fact that, like you said, the spot Bitcoin approval can literally just blow up your trade in one day. A Cointelegraph intern can tweet out some fake news, and this ETH BTC chart, if you're long, would get blown up on the back of that. And it's not very often that we have. It's not, and I'm not saying that's the most likely scenario, but for me, it's all about mitigating risk. And in this situation, I think the riskiest scenario is Bitcoin taking off to the upside and leaving ETH in the dust, and us seeing a retest of the lows in this order pair. So because of that, like, I think if you're bullish ETH and are of the belief that we're going to see some trickle down in terms of like Bitcoin showing that high beta price action, showing resiliency, we're going to see that translate into a little bit of risk on price action in ETH, and then perhaps into the altcoins. I think the best way to do it, maybe not the most profitable in hindsight, but I think the best like risk reward perspective is just go ETH USD straight up, because then you don't have to worry about the outperformance of Bitcoin. Ironically, that is a bit ironic, because we've used ETH BTC as sort of the safe haven, like risk pair to kind of mitigate risk. But in this case, I think with the spot ETF seeming more and more like an inevitability, that the best exposure to ETH is just straight up ETH USD rather than ETH BTC, because this chart will pump, but it won't outperform Bitcoin on the back of that news.
And also, just to dig into the technicals on, with what Monty's talking about, every time we've swept the Monday low this week, we've ran back up to the weekly VWAP. So two obviously critical levels for anyone trading. I mean, I really don't like this 4-hour wick, so I really hope it doesn't close below the previous daily close, as that would definitely be a bad sign on a rejection from the weekly VWAP. But provided we do hold, or maybe we get one more sweep of the Monday low. If we sweep the Monday low and then close back above the Monday low, obviously it's been a pretty good long, but I would just watch out for this weekly VWAP right here, because if we kind of go back and look at Bitcoin and its weekly VWAP, I'm pretty sure it's been above it, and it's been bouncing off of it pretty much all week. That's basically been more or less our support line for quite some time, since even before Monday, to be honest with you. So interesting that we're seeing kind of that inverse reaction where now it's been kind of stuck underneath. So if you do want to get long ETH, if it breaks above the weekly VWAP, then I would say that's definitely a big trigger for longs and could be some happiness into the weekend or into next week. Else, then you would look for at least just some sort of scalp on a sweep of the weekly. And then if you form another lower low, you better hope and pray that this low from last week holds. So I really don't love ETH right now, but it's one of those things where every time everyone's in consensus about ETH looking like crap and Bitcoin's the god, is when we do end up seeing that reversal occur. So it's very much a contrarian trade, but I would personally wait for a better technical trigger than just jumping in right now. So, do we have any trades for ETH USD, or maybe we want to move on?
I think there's a lot. I think there are a lot easier ways to make money than trading ETH BTC right now. And perhaps this ends up being the low and I look like a fool, but this is it's been a tough one because you don't really know if it's going to work in both risk on or risk off, because lately it's been very bad in both environments.
Yeah, and one asset that looks really good right now, obviously bumping up against resistance, so I would be careful with just diving into longs as well. But Sol has just been slowly, and sometimes not so slowly, just creeping back up towards these highs from July. And I don't think that's, although I am not a fan of the chain, and I do think that they are going to eventually run out of money based on their current burn rate, which I think is close to 50 million a year, and they're not bringing in nearly enough in fees. So they're not operating technically as you would want a company to, but the meme ability and the popularity of Sol is something that I would not mess with just yet. So obviously you got to kind of you got to battle up here for liquidity, but if we can hold this level, which is the 24.5 level, then I do think you can see another springboard, back above 26 and maybe into 27. So obviously, if we end up closing below this level, this is now a deviation, and you would expect price to at least move to the bottom of this range, possibly tag this level or down here. But if we can hold, like I said, that 24.5 level, should act as a springboard and push us higher, especially if Bitcoin is moving in the direction that Monte wants it to. So, which is, obviously towards 30K. So I'm not in a trade on Sol right now. I exited this morning. But, I just want everyone to be aware that it's clearly one of the strongest performers in the market on the cryptocurrency side. And if Bitcoin does move higher, it would not shock me to see it towards 27, or maybe, if Bitcoin gets above 30K, to see it, attacking $30 or higher. So, that's one I like in the near term, which is against my brain. Sometimes when you overthink things and say, it's like the ADA trade all over again. If you were shorting ADA for years, you had very few moments of success. So that's why I like Sol. Any thoughts, guys? Want to definitely get your opinions on this one, since we haven't really covered this too much on the show.
I mean, I don't really have all that much to say. I think most of the strength that we're seeing here is due to the fact that people were expecting weakness. And like I took a page out of The Art of War from Sun Tzu. When people were expecting weakness, it showed strength. And, I think that's something that can continue to happen. Now, is it something that I want to bet on in terms of, do I want to bet that that's going to continue to happen over the long term? No, not necessarily. But when you see those dips down, and people start to vigorously short this asset, I think that's a great indication to buy and just basically fade the public. So keep an eye on funding rates. Keep an eye on sentiment as well. If sentiment gets overwhelmingly negative, I think that could actually be a good counter indicator to start, maybe scaling in. But other than that, I haven't traded Solana, and for me, it's just like I'm sticking to Bitcoin. And as the title of the show suggests, I'm trying to keep things very simple. In Solana, there's not a whole lot simple about it. It's a pretty unique situation right now.
Yeah,
Like, where's
sentiment's
the
pretty bullish as well.
where
So.
like where is the edge in the trade? You know, like I have no idea.
Yeah, it's
The edge is if Bitcoin goes up, Sol outperforms. That's the edge.
That's
But,
called
yeah.
beta. That's not an edge.
Yeah, I know. But that's the idea of the trade. I mean, the edge is the beta, because if you're just betting on up, then Bitcoin goes up 3%.
That's
Sol
not what
goes
an
up
edge
8%.
is. That's just beta. I'm saying what's unique that gives you an advantage to be able to predict the outcome that will make money over time if you to take that trade 1,000 times. So, and right now I don't see any. Yeah, but it could go down and it'll go down worse than Bitcoin. So
yeah, and that's the risk, and that's why I'm not saying dive into the trade. You know, nobody should long after an 8% day. You know, I'm not saying that. I'm saying, you know, but I gave people a support level and said if it holds this level,
I'm
with
saying
the high beta,
we're talking about
Bitcoin
like the
outperforms,
definition of an edge. That's it.
I don't understand what you're asking, because we just talked on the show about Bitcoin going up, and that's our trade, and so I'm giving people an asset to possibly trade in addition to Bitcoin because it's been outperforming.
Yeah, but like buying Solana is not an edge to Bitcoin. Like,
It is if it's historically outperforming during bullish momentum.
That's high beta. That is not, because an edge is something that will give you an advantage over time. Like, all right.
Yeah, the edge is if you're predicting momentum and want to trade, you know, an asset that is outperforming, then you have the option.
I feel like we're a little stuck on semantics here. Let's move on. One thing that I think is going to be really important is what happens tomorrow in equity markets and whether or not we see that continued resilience from Bitcoin. Because already I think we're starting to see the positive price action from Bitcoin and people waking up and realizing that, oh shit, Bitcoin's holding its own during a very weak equity market. And that's going to trickle down into ETH. So I'm starting to like that ETH trade more and more. Just ETH USD. You've clearly defined risk in the sense that it's been massively underperforming relative to Bitcoin, and it's widely diverged from its 200-day moving average. So in terms of like assets that I think could plausibly show high beta over the weekend, Solana is one, yeah, but I think ETH is one that could show high beta on the thesis that it's just been underperforming so bad. But people are now kind of waking up and coming to the realization that, hey, crypto actually is acting as sort of a safe haven sector. Maybe ETH will be a benefactor from that as well. And then we see ETH move. So that's just something for me to watch out for. Is if tomorrow equities are down and Bitcoin is still green, that would be massively bullish and get me quite excited for the weekend, I gotta say.
I do agree. I typically like to watch the Friday close. And if, you know, like I said, if I do see crypto strength and there's equities weakness, you know, the cartel, the people, you know, the weekend gamblers like to come out and push that momentum forward. So I do like that idea, but of course it does hinge, you know, I wouldn't start that bet tonight. You know, I'd wait to see how we end up, you know, closing tomorrow. So,
yeah.
With that being said, we are going to wrap up the show soon. So if you are in the audience and would like us to cover an asset or check something out or discuss a hot topic in the next 5-10 minutes, we would be more than happy to do that. But as we, you know, slowly begin to wrap things up, just want to remind everybody that CJ Monte do a show every morning at 10 a.m. on this YouTube channel. And we do work with both BingX and Dydex, BingX being a centralized exchange, Dydex being a decentralized exchange. And you can get rewards and bonuses using the links below in the chat that will both cheapen your fees, offer, you know, bonuses for trading, as well as provide rewards for the volume that you commit to the exchange. So, and then do not forget that we obviously are a part of the Trade the Chain family. So we do have 14 days free at www.tradethechain.com. That 14 days free gets you access to the data dashboard, the community, which gets you access to CJ, Monte, and myself 24/7 Feel free to tag us, hit us up, ask us questions, show us love, show us hate. It's your community to do with as you please. So not really seeing too many questions in the chat. So just want to say thank you to everybody for watching the show. Thank you, Mike, for your participation and your kind comments. Those do very much go a long way for our self-esteem and our trading acumen. So really appreciate that. With that being said, good luck, happy trading. See everybody next Monday.